So effectively, just I had a couple of additional points just to make on the last slide Alan did about foreign income. I suppose just on the foreign pension one, it's worth mentioning, I suppose, that there are changes to foreign pension lump sums with effect according to the TDM, which is behind Tax and Duty Manual, which is behind E-Brief 113 of 23. It says that those changes take effect from the 1st of January 2023. But those of you that have been looking at foreign pension lump sums know that it has been somewhat of a, I suppose the price of it, but it is a grey area for the last 2 or 3 years, and there's been lots of scraps at TALC and similar bodies. But actually, even though it says that it takes effect from 1 January 2023, there's published correspondence between Revenue and some of the representative bodies saying that they will apply the same treatment retrospectively. So what does that mean in practice? I have a pal that I deal with, let's call him Tom, because that's his name. And he had one recently, and if you actually go to the TDM, it's quite easy to pick your way through it. And surprisingly, for me anyway, but subject checking the detail of it, he was saying that he had someone who got a pension lump sum of 30 grand or something from the UK. So as you probably know, it's 200 at the 25% tax-free lump sums that's drawn down, up to 200 is tax-free, and then up to the limit of 2 million, you get the next 300 grand or up to 300 grand at 20%. But interestingly, in the actual TDM, it looks like you get up to the first 200,000 of a drawdown from a foreign pension at zero, i.e. it's exempt. So that's worth checking out on the facts. But I suppose the key point on that is for foreign pension lump sums, Alan already covered the, in inverted commas, normal pension rules. But for the the lump sums that are drawn down, Tax and Duty Manual behind 113 of 23 is the E-Brief. So it's worth looking at that. The other thing as well is obviously under the treaty to check who has taxing rights, because we get this quite a bit. If you have someone, say, who has come back here from the UK in particular, if they haven't notified their pension provider in the UK that they're here, they'll apply tax at source in the UK, which is incorrect, because under the treaty, the Ireland-UK treaty, Ireland has taxing rights. And if that tax is applied at source, it's incorrect. So the proper procedure is not to claim a credit against the Irish tax, because Ireland has full taxing rights. What you're supposed to do is seek a refund from the UK. So if you know someone who's moving back here or coming here, i.e. they're a UK citizen, they're coming here, just make sure they notify their UK pension provider before they come here, or that's a bit of a mess to try and tidy up. The other one I want to mention is Alan touched on the transborder relief. That's a bit of a hot topic. I know Revenue in the anti-violence unit are quite hot on that. I think there was a recent press report about an appeal case that was settled and Revenue won it, and it just looked a bit messy. So that's an area that Revenue are focused on. It's complicated, and Revenue are looking at it. And like I said, there was recent press reports on it about a case involving transborder relief. And Alan also mentioned the offshore funds. I suppose what I just mentioned there, and I will move on, is that the Tax and Duty Manual 27-02-01 is a very handy reference point, because it has some excellent decision trees in it. So if you're trying to figure out, to use a technical term, what in the name of Jay is this yoke, this fund that is in Cayman, Belgium, wherever it is, that Tax and Duty Manual 27-02-01 is the one for EU, EEA and treaty, and has an excellent summary table in that I would recommend you're looking at if you're trying to figure out what the hell is going on with an offshore fund.